Hey there, everyone. Welcome to our weekly East Bay Comps and Coffee Live. This is where we get a chance to share with you guys what's going on with the market in the East Bay. We have so many clients asking questions about this crazy market we're in,
Yeah.
So we have some wonderful information that we want to share. So I'm Lisa Doyle, and I am with the newly official Sereno. So our joining of Jay Rockcliffe and Sereno is now official. So we're excited to be East Bay Sereno. So welcome everyone.
Yeah, I'm Ryan Day, also realtor with the Doyle Team and with Sereno.
Yeah, so exciting. It's so excited, Ryan, because so much of our market is influenced by the South Bay. So now we're the best East Bay company connected with one of the largest, wonderful South Bay company to work together to help support these families that are rushing into our market from the South Bay. So I think that's going to allow us so much to help our clients even more. So we've got some great data to share. We're going to just jump right in. So one of the biggest questions that people have is, where's the market right now? And most people have been watching, Ryan, and we get comments from clients all the time that the market seems very heated. And you're correct. And so the first Saturday of every month, we do an update just to give you guys a heads up what's going on with the cities, where we are with data, where are the trends. So I'm going to jump right in. I'm going to give an overview of our East Bay, which we like to talk about. The East Bay is anywhere from Livermore down the 580 clip, down the 680 clip into the 24, which is the La Miranda market, all the way to Martinez, all the way around from Walnut Creek, Concord, and into Clayton. And we also serve the East County area, but we bring you data on that area. So it's pretty broad. It's a pretty wide market that we specialize. And you'd be surprised as far as the numbers are concerned. So I want to just give you guys an overview. So if you guys remember, when we did our data back in January, so here we are, first part of March, we did an update about 5 weeks ago. At that time, there were 360 active listings in that whole Livermore to Clayton, that whole surrounding in the 24. There were 816 pending. And I want to give you guys a little bit of contrast. Compare that to 2011 at the bottom of our market after the financial crisis. The active and pended ratio is the best way to really determine where's the market headed, like how heated are we and what can we expect. Back then, if you guys remember, there were 2,400 active listings in that area. So we've gone from 2,400 to 360. So it's crazy. And there were about 900 pending. So the supply and demand obviously was in the favor of a softer market, which is what we experienced at that time. And now we've been recovering ever since. And COVID has given us just such an unexpected heated market. And we're going to give you guys numbers. But I want to share with you, so the beginning of 2020, we had 1,000 active listings, just over 1,000, and there were only 980 pending. So if you guys remember, 2019 was a softer market by significant numbers. And now here we are, 2021. So here we are, this is beginning of March. In our whole East Bay, right now, there's 561 active listings and 947 pending. So of course, the pressure on the market, which is why we're rising. Inventory is so much exceeded by demand. But if you remember, even just a month ago, we've got about 200 more houses for sale now than we did back in January. So we're starting to see trends, which we'll share with you why. So that's basically an overview of our whole market. There's one data piece that I like to share. So the highest sale in the market, and this will give you guys a piece of information. We're going to share with you the high end, what's going on with the high end. And this is one indication of today's robust high end market. So the highest sale in our market is 10 million, just closed in February of this year. But what's interesting about this house, so it closed at 10 million. It's a 15,000 square foot on 5 acres in Alamo, 12 bedrooms, 13 baths, obviously a very sizable home. This house was on the market for 297 days, right? So they were trying to command a value when the market wasn't supporting it. And now the robust high end has caught up, and now they were able to capture. So that's an interesting data point. Yeah. So I'm going to let you share some of the market.
Sure. And we're seeing that in the lower, like high end, right? I guess like the $2 million range as well. Those homes are getting souped up really quickly.
Yep.
Going to a little more individual cities in our Contra Costa area. San Ramon, right now, we have 37 active homes for sale, only 37 in all of San Ramon, and this is single family homes. Danville, we have 40 active, Pleasanton, 40 as well. And Livermore, you're having 45 active homes for sale. And that's going to be congruent with, Walnut Creek, Dublin, same thing. Low inventory, like you said. Yep. Another really interesting data point here is comparing last January of 2020 to this January of 2021, and specifically looking at San Ramon single family homes. Last year, the average sales price in January was 1.2, and this year we're seeing an average sales price of 1.4. That's an 18% increase, with the inventory going down 17% from January 2020 to January 2021. So less inventory is going to put a lot of pressure on the market, like you said, and we're seeing those prices skyrocket.
Yeah, it's crazy. I would say back in 2018 and 2019, when the market wasn't as heated, we actually had, all of our cities had more active than pending. So that was an interesting time. It's like we were in definitely a more normal market. San Ramon was still the most heated back then, but I have never seen 35 houses for sale only at one time. And, San Ramon is definitely the hot spot right now in our, in the East Bay. So I'll give you guys, and I'm going to give you some data on some of our other cities. So that was awesome, Ryan, with the area out here in the Tri-Valley. So the La Miranda market, I want to give you guys a heads up. So we do a lot of work in that Lafayette, Moraga, Orinda area as well. That market is definitely what you might call a little more normal. Right now, there's 74 active listings and there's 88 pending. So they still have more pending than active, but not quite the disparity. That word.
Huge disparity.
As what we were seeing in the Tri-Valley. And then what's interesting too about the La Miranda market is, again, the high end dramatically improving from previous years. Maybe that's why their market has become more normal, where that market has tended to be a little softer, where, more 2, 3 million, 4 million houses tend to stay on the market longer. The average market time right now is only 27 days. So pretty short, even though the market is higher in that area. So we're definitely seeing a little bit more of a robust. And then as far as, I wanted to share with you some data on Walnut Creek and Clayton. So Walnut Creek is another area that has tended to be what we call a little more normal, a little more stable, right? There's 101 active listings right now, and there's 110 pending. So anytime you see active and pending kind of similar, then of course you've got a little bit more of a normal market, and the average market time there is longer. It's about 54 days on average, right? Some are selling much quicker than that. And then the last one that we wanted to share some specific data on is Clayton is a little area that a lot of people are unaware of, Ryan. My mom lived in Clayton for over 30 years, and it's a wonderful, peaceful little town just outside of Walnut Creek. There's not really a whole lot of action that goes on there as far as real estate's concerned, but prices do tend to be a little more affordable. It's interesting, right now there's only 8 houses for sale in all of Clayton, and there's 18 that are pending. So, that market has been heated too, and the schools there are very, very strong, just like Walnut Creek and the surrounding area. But Clayton is a little hidden, kind of a hidden treasure that a lot of people are unaware of. So,
yeah, I mean, you have the beautiful Oakhurst Country Club there, and really private, and right the foothill of Mount Diablo as well. So you're really great location.
Yeah, and the downtown area is very charming. The street, they have the parades there for 4th of July and all the restaurants and stuff. So Clayton is very charming. There's one other area I wanted to introduce or let people know. The Benicia area is another market that I would recommend buyers pursue or look into, because what you can get in Benicia for under $1 million is significantly nicer than what you tend to see on this part of the bridge, and it's really not very far. We have a family right now purchasing a home in Benicia, a newer home. It's only $960,000. It's a 3-bedroom plus a loft area, and then they've got a detached separate casita apartment, and that's all for only $960,000. So there's affordability there in Benicia. I just want to mention that, as people are watching.
It's a great idea.
Yeah, so cool. So the biggest thing that we're gaining from the market trends is that, today's consumers, it's crazy with the demand being so much higher than our supply. People say, why are our prices rising so much? Probably the 2 biggest indicators that we've seen is just the people able to work from home much more, so they don't have to work. They don't have to live close to work anymore. So they're just, they're basically, kind of swarming into the suburbs, and the Tri-Valley is one of the most popular areas for schools and everything else. But there's one data point that I wanted to share real quick, and then we're going to get into some good slides. They'll share with you guys what's going on nationally, which is real consistent with what we're seeing in our area. So the over 2 million market has been one that has been much more robust in 2021 and in 20 than what we had prior. So what's interesting is the over 2 million houses, which our market, there's over 2 million isn't necessarily, like you said, the high end, but it's an indication. We tend to see a lot more selling under the 2 million, of course. So in 2019, there were only 35 houses in our entire area in the first 2 months that sold over 2 million. 2020, 56. Guess how many are pending, or guess how many just closed in the first 2 months of this year, Ryan?
Probably more than that. 85, 90.
A lot more. Actually, 112. over 2 million have closed. So the high-end market, if you own a high-end home and you've been wanting to capture top dollar, the demand for the high-end homes, because of all the Silicon Valley influence, high-end homes are definitely showing a lot more robust sales and a lot higher prices.
Mhm.
So,
And
yeah,
that's crazy to see because you'd think it'd be the opposite, right? In times of COVID and stuff, those prices are going down. Like you said, people are flocking from the South Bay or even the North Bay because they can work remotely. So they want that extra bedroom or office space.
yeah. And we have great schools here in our East Bay, so
Mhm.
people are drawn here for nicer housing, more
Yeah.
affordable prices than those other areas. And the biggest feeder of our market is just the tech companies. With all of the Amazon exploding because of COVID. All the companies like Zoom and Facebook and all the tech companies have really grown, and they're giving their employees so much more flexibility. Our clients who work for those companies, executives, they're being told even after COVID, they're going to have so much more flexibility. So I would
Yeah.
say the buyers keep asking, when is this heated market going to change? If we're likely to still see demand moving forward. So
Yeah. I mean, the inventory is so low, and we can show the slides. The inventory it keeps going down year
yeah,
after year, as far as month after month, rather, since COVID. So it's crazy.
yeah, exactly. Yeah. So let's do that. Let's show them the slides. We've got
Yeah.
some good stuff to share.
So I'll view this here.
Yeah, so this doesn't come as a surprise for
Yeah.
what everyone's been saying. I mean, last year, of course, during the shutdown, that March through May, we had the biggest kind of freezing of the market.
Mhm.
But right now, this was the end of last year's data, and 2021 is even more like lower inventory than this.
And you'd say, for anybody who doesn't know what these numbers mean, anything above 4 months of inventory is typically more of a softer market.
I would say, I think nationally they say anything over 3 months of inventory, 4 months of inventory is what you might call normal.
Hmm.
It's closer to
Hmm.
6 months of inventory, which what that means is that a house on average would take up to 6 months for, like, if we were to not put any more houses on the market, that all of the current inventory would be gone in that window. So 3 months, 4 months tends to be more of a normal market. 6 months longer tends to be more of a softer buyer's market. And right now, less than a 2 month inventory. And right now we're probably at about 30 days inventory with only 35 houses for sale, in the city. So
Yeah, I mean, Sereno, the days on market right now in February to March 6th, it has been 5 days, 5 days on the market.
yeah,
So that house is gone before it's even on the market, it seems like, in most cases.
yeah, market's
Um,
very, very robust. Yep.
yeah, this is a
Yep.
great quote from Ollie Wolf, from the chief economist of Zonda. Says
Yep.
some people will feel comfortable listing their home during the first half of 2021. Others will want to wait until the vaccines are widely distributed. This suggests more inventory will be for sale in late 2021 and into the spring selling season of 2022.
Yep. Yep, exactly. I think that we're definitely going to see, and we're going to talk to you guys about some of the most, some of the biggest reasons why we've had low inventory, and maybe why we're going to start to see more. And that's one of them for sure.
Yeah, exactly.
Yep.
Yeah, this is interesting too. A lot of home buyers were concerned about COVID. So we saw it ourselves firsthand, and we go meet with homeowners. They say, no, we don't want to sell right now just because we want to stay safe, which is very understandable.
Yep.
But now things are going to start changing once the vaccines roll out and that comfortability aspect is there for COVID.
Yeah, exactly. And what's interesting about this is the 34% life is too uncertain. I think a lot of that was people that wanted to make a move, but they were so afraid they couldn't find their replacement home that they didn't list their current house. So
Hmm.
once inventory starts to open up a little bit, which we're starting to see a little bit now, just because of seasonally, and then of course because of the COVID kind of working its way through, I think that will impact a lot of our potential future inventory for sure.
Yeah, for sure.
Yeah,
And here's a work from home consensus view.
yeah, yeah. This is an interesting one. So prior to 2019 or 2019, prior to COVID, only 6% of people worked from home, and then of course during the main issues we had of 2020. um, we had a big significant group working from home, 21%. And this is nationally. I think in our area, because we are fueled by tech, we had way more than 21%. This is a national statistic, but it gives you an
Yeah.
idea of trends. 21 is expected to go down to 18 because people are still working from home. And then after COVID is resolved, which we're thinking 2022, we're still going to have double the amount of people working from home than we ever had. So
Yeah,
it's just
that's
going to
huge.
continue to fuel our market. Yep. Yeah. So huge.
And mortgage rates are very interesting as well.
Yeah.
Yeah.
Yeah, we're starting to see a little bit of an uptick. So rates went down to about 2.6% end of last year. And
Hmm.
the rise that we've had puts us right now about 3.25%, which is a pretty pretty good little jump. I mean, what they're anticipating is as the economy becomes stronger and, the hospitality end of our economy gets back to work, we'll start to see things improving where rates are likely to continue to rise a little bit. So, good thing to watch. That's one of the things we're going to talk about as far as what will maybe potentially cause some inventory to open up a little bit. So
Yeah, exactly. It's definitely one of them. And Daryl said a couple of weeks back when we had our cups of coffee, they rose 0.25% that he saw just in that week, the last week of February.
yeah, exactly. Yep.
Here's the mortgage payment decreasing. So this is crazy.
Yeah, you would think with prices rising, this is such an interesting statistic. One of the questions that we get from a lot of clients is, or buyers especially, who are hoping that the market will soften a little bit. They're thinking that all the forbearance and people that have struggled because they work in the hospitality and those industries, travel and hospitality, that the market will drop. But what's interesting about this is even with our rise in prices, because interest rates have been so low, people are spending a lot less percent of their income on housing than what they have in the last couple of decades. So it's like we're just seeing an interesting trend towards people are able to, because of interest rates being so low, able to afford housing that might be a little bit larger and or spending less of their money. Yeah, that's good. Yeah, and this is an interesting one, Ryan. It's like a lot of the buyers have been asking too, because some people in the segments of our economy have struggled more. Small business and hospitality, restaurants, and things like that. People have gone on forbearance. But gosh, it looks like so many people that have started out in trouble have been able to start working things through. I'll let you go ahead and share the data there.
Yeah. So right now we have 51% of the forbearance plan individuals who are paid in full. So that's good news. 33% are they have a repayment plan, and we just see 15% here that still might be in trouble when that moratorium comes to an end here in, I think it's June 19th. We're expecting to see the moratorium come to an end.
Yeah.
So, in your experience, do you think that could be something that could help the inventory rise as well?
I think maybe, but I think, I think that they even talked about extending this till September is what the rumors are. But
Okay.
I think what this means is as soon as restaurants and travel, I think travel will be the last to recover. People will be more hesitant to travel overseas for a while, I think. But as soon as the restaurants open and the hospitality people, we get those businesses back to work, this 15% will fall dramatically. So I don't think we're going to see a big influence of real estate coming on the market because of COVID. That would be my guess, at least in California and Northern California. There may be segments across the country where that's different. But I think our area, because we've been fueled by businesses that haven't been as impacted, we're not fueled by hospitality in a great, we do have our wonderful restaurants that have been struggling, and we're trying so hard to help them. People that are in industries where they struggle, but that's not the biggest segment of our economy, at least in.
And for the individuals who may still be in a position to sell if they're taking advantage of the forbearance, for again good reason, very good measure here during COVID. You explained before we were on that this could be a little different scenario than 2008. If we were to go and see people selling, they're going to actually have a lot more equity in their home.
Yeah, for sure. I mean, the amount of people. I think one of the biggest statistics is mortgages across the country are less than half of what they were back in 2008, meaning that we as a people are not using our houses as ATMs like people may have been back then. They're not taking equity out. So we have double the amount of equity in homes than what we had back then. So I think that will help the majority of homeowners. Even if they lose their company or their business, they still have a lot of equity. They could sell their homes rather than having a foreclosure. So, that's what we've seen so far. Yeah. And our last slide.
This is from Lawrence Yoon, again, the chief economist at National Association of Realtors. But given the huge price gains recently, I don't think many homes will have to go into foreclosure. I think homes will just be sold and there will be cash left over for the seller, even in a distressed situation. So that's a bit of a silver lining in that we don't expect a massive sale of distressed properties, which you just kind of explained because of equity. Yeah.
Yeah, exactly. That's what we said. And I think that lenders too, in the last 5 to 10 years, most borrowers come into purchasing a home with 20% or more down. Back in the 90s, right before the financial crisis, buyers were buying homes, if you guys remember, with what's called a negative amortization loan, which means, let's say you buy your house for $1 million. they were actually financing $1.05 million. So they were negatively amortizing, meaning that they had absolutely no equity. And lenders were actually doing that back then. And so today's world is just very different than that. So borrowers are coming in with down payment, which is very, very good. People need to,
Yeah.
do what they can to save money so that they can buy a home.
Yeah. Now we saw the stats and we saw, right, the slides. What other factors could really be the main driving force into more inventory and a different market here in spring or summer?
That's a good question. I think, naturally the seasonal inventory tends to rise, in the spring. But I think the biggest reasons why we're likely to see more houses hit the market over this next 6 months, which you guys remember, supply and demand. We talked about the gap between what's active and what's pending. That is what really drives how much prices will continue to grow or maybe become a little more normal. So I think that number one reason, or one of the number one reasons, is because people that have been a little cautious of COVID, kind of like what we talked before, now we're seeing vaccines unrolling. We're seeing more, like, less people impacted by COVID across our whole country. That is going to open up some inventory. That's going to allow the people that have been a little cautious, even though we were very safe, we were keeping people very safe with protocol, but some people were still cautious about it. That's going to open up. Yeah. I think the number two reason is because Prop 19, if all of you remember, we did an update on this a couple of weeks ago. So Proposition 19, at least this is going to change California potentially. So if you imagine someone who's lived in a home for 35 or 40 years, they could have been feeling trapped a little bit with the ability to sell their home and move, even if they wanted to downsize or move closer to their family. If they didn't live in a county where it allows you to take your tax base with you, they've just kind of waited. They've been a little bit like stuck inventory, captured inventory in a home, or captured equity that they couldn't really sell because they couldn't afford tax. Now Proposition 19 allows this person to move anywhere across the state, takes their tax base with them, and they can still retain that lower cost and allow them to move. So I think Prop 19, and that actually starts April 1 of this year.
Yeah, I know you have a couple of clients waiting to take advantage of Prop 19 as well. So our team alone, we already know for a fact that we have more inventory coming on in April. So you can 100%. Bet every other realtor and homeowner are thinking the same thing if they can.
Exactly. And I think the last one is that everyone that's watching the market, at least for me, this is one of the top three. Like, we have clients that are calling us every day thinking, oh my gosh, I want to move. I think maybe I might want to move in 2 years, but this market might be too good to let go. The experiencing of this kind of
like a FOMO, fear of missing out.
Exactly. So, hey, maybe we should take advantage of this market and maybe move a little sooner than what we had planned. I'm hearing that from people all over. Any retirees that are almost ready to retire, making plans. So I think those are the three reasons: COVID, Prop 19, and then people just thinking this is an opportunity that they don't want to miss. What do you think? Is there anything else that you think that would allow inventory to be rising?
Other than just the cyclical market of the summer and spring selling season, like we typically see in a real estate industry. Other than that, those three are the main ones. What about someone who's looking to move in next January, but they want to take advantage of the market? How do they take advantage of the market and maybe still stay in their home for a little bit longer? And what are some options for them that way?
No, that's such a good question. We have people that ask this all the time. So I'm so glad you brought this up. A lot of people are afraid to list their homes for the fear, where do I go? Where do I go? I know I want to move to somewhere else. I want to buy a smaller home, downsize, whatever, but they're a little bit afraid of becoming homeless. So it's become such a trend, at least in Northern California. I do know I have realtor friends across the country where this is not as much the custom, but we do rent backs in our area. We do long escrows. We do times where clients, we had a family that sold their home last July and they just moved out in February. So that's a longer than normal, but it's not uncommon for a family to sell their home, have a buyer who's willing to wait, then they can figure out where they want to go and find a home and kind of move seamlessly from their current home into their new home without having to fear of that middle of that homeless part.
Yeah.
So, yeah. So
for the buyer who's, okay, sorry.
Oh, you go ahead.
I was saying that for the buyer of that situation as well, they get to take advantage of the low interest rates right now, and they don't have to have that stressful process of figuring out where to buy a home, or with the market being so crazy, they don't have to go through that if they don't want to. It's a lot more of an easy process for both parties.
Yeah, exactly. So and join us for future Comps and Coffee. So in 2 weeks, I wanted to share, we have a lot of clients that ask us, they want to retire. They've lived in Northern California for 30, 50 years, their whole lives sometimes. Where do we go? right? Where do we go? So there's so many cities across the country where buyers are flocking to for retirement. So we're going to bring some real estate agents from some of those markets. One of them is like Eagle, Idaho. We have lots of families that ask about. That's a wonderful little charming little city in Idaho that people are looking at for retirement. Arizona, parts of Southern California, you get Palm Springs, Utah, Florida, just so many places across our country where the markets there are very, I would say, supportive of retirees, right? Taxes are they've got tax rates that are low or no tax, no state tax. So we're going to bring agents from those markets, and we're going to help you guys get introduced to some possibilities. And they're going to come talking about, what's the average pricing in that area? What can they buy for their money? What's the advantages? And that way it'll give you guys more options. So for those that are considering retirement, we want to help.
Yeah, for sure. Yeah, that's a great plan. I think they have a lot of benefit to add to our service that we offer clients if we can easily transition them to the next state and allow them to retire stress-free.
Yeah, exactly. And then of course, the first Saturday of every month, we'll do this kind of update. So if you guys have questions, shoot them our way. And so appreciate you watching, and everyone stay well. Thank you for tuning in. Yeah.
Yeah, thank you guys.
We'll see you soon. Take care.
All right, that was fun. See you, Lisa.
See you soon, Ryan.